Welcome in to the What Do We Do podcast. Kyle Bogey, Dewey Stephan here at Great Lakes Wealth, episode 8 of the What Do We Do podcast. Again, appreciate all the support, the downloads, the interest, the ratings that you guys have been able to give us here over these first several episodes. It's been a really fun ride. I think we've covered a lot, and Dewey, today is going to be another one of those episodes where you're going to kind of teach me a little something about investing in a very specific thing, and that is gold, my friend. How you doing today?
Good to see you, Kyle. And I'm going to tell you that, you know what? You're worth more than your weight in gold, my friend. Okay, how's that for starters?
Boy, I think that's a new record for the WDD podcast. Okay, what, 10 seconds in and we already got a cliche. It's fantastic.
I'll try to do a few more throughout the show, but I mean, you know, if all that glitters is gold, we're going to have one shiny day, baby.
We talked about members bounces. What was the one that we talked about last episode on 7? The CYB, was it?
Count your blessings.
Bingo,
Count
right
your
there.
Blessings. That's
all right.
it.
Plenty of cliches to come, but really, I think going to be an informative episode on gold, investing in it, what factors play into it. I admittedly know nothing about it, but I've seen the infomercials with the best of them. So I look forward to kind of diving into that a little bit. We'll also veer off, much like we did a little bit in episode 7, kind of into the sporting world and investments in memorabilia and collectibles and cards. Of course, growing up, everyone collected something. We'll kind of dive into that realm a little bit off the beaten path as well. So please stick with us. We got a lot to do. And again, if you want more information, you can always go to greatlakeswealth.us. So, Dewey, you want to just jump right in here?
Let's do it. So gold is an investment. Gold is a collectible. Gold has so many uses out there. It's been around for thousands of years, as I'm sure all of our listeners know. But gold is known as the universal precious metal. Period. End of story, right? And along with that, you've got gold that is durable, doesn't rust, is shiny, it is scarce. We'll talk about that. Used as jewelry, has modern day applications, you know, with electronics and medical. But above all else, gold is known as a currency of global economics.
Okay, so let's kind of jump in here because there's a lot of different layers, I suppose, that we can cover as it pertains to gold. I guess simplistically, okay, when you talk about, hey, I want to invest in gold, okay, I'm not going to go to some corner store and buy gold or something. It is something that within the market or in an app or a website, you obviously with Great Lakes Wealth, you have to invest in mining company. How exactly does it work when you talk about investing in gold?
Great question. So you take a step back and you talk about asset allocation, right? And whether you're doing it yourself or you have the advice and counsel of a professional, everyone's financial plan and their asset allocation should be diversified. And typically you would think it's stocks, bonds, and cash. That's historically what it was, stocks, bonds, and cash. I think in the last 20 or 30 years, many investors have added real estate. So that's something we're not talking about today, but real estate is added in there as a non-correlated asset, if you will. But another one known as an alternative asset is certainly that of gold, precious metals. And so by diversifying your portfolio, you have investments that are either A, non-correlated, means they don't all move the same direction. They beat to their own drummer if you want. And so with that, gold is very much an important part of portfolios here at Great Lakes Wealth and should be for our entire podcast listening audience.
I mean, of course, gold necklaces, the gold chains. Everyone had one. They were, growing up, in middle school, I had the gold chain, rocking my buzz cut and all that. But specifically about what gold is, what it represents, why you invest in it, why is it such a valuable thing and something that you really should be considering, as you mentioned, when you're diversifying your portfolio?
So if you're buying gold for jewelry to, walk around your house in, Saturday morning with your new baby and you're rocking that 18 karat, probably not the 24 karat, but that 18 karat gold plated, necklace, that's not for investment and that's not for hedging anything in an investment portfolio. That's just for, enjoyment, right? And so again, jewelry, the the gold medals that athletes win. That's, I guess, a whole other story we might talk about today as well. But the uses of gold, because it's so durable and its uses are so many that it's not for investing always. It has these other uses. But in the case of investing, gold is known to be non-correlated to other investments. This year alone, you have the stock market that's still down on the year because of COVID-19, the pandemic, all the things we've been talking about in the prior episodes of this podcast. But guess what, Bogey? Gold is up on the year. And let's just do an off-the-cuff little trivia question here.
Please.
Do you know how much, roughly, I'll give you within a percentage, how much is gold bullion up on the year?
I don't even know what bullion means. So that's one way that you can kind of throw me off there. A percentage you want that it's up for the year?
Yes, let's say the S&P's down 5%, the Dow is down 10%, the Nasdaq is up 10%. Let's say if those are the percentages, what do you think gold is up on the year?
Obviously it's up, so that was a nice clue that you gave me there. I will say it's up 8%.
Okay, well, again, that would be a good guess, because if the other stock market indices are down, maybe it's up. I said hedge about 5 times. That would mean it's non-correlated, does its own thing. It's actually up 18% year to date, right? And so if you're looking for an investment to weather the storm of the market chaos or investment uncertainty, just me telling you that it's up 18% year to date while the markets are down, that should be your clue and your evidence there, right? So, some of the investment reasons or the macro reasons why gold is thought to be an asset class or part of an asset class called alternative investments is because it is known to be scarce, right? On the planet, even better question, do you have any idea, there's no way you'll get this, but the number of ounces of gold that are meant or calculated to be on the entire planet, right? Gold, there's only so much, right?
Yeah.
It's still in the ground, in your,
They got to find it.
In your safety deposit box. So that's one reason. It's there's only so much. So because it's known as a scarce commodity, I'm just going to give another trivia question to you.
I love
Any
this.
idea of how many ounces of gold are there estimated to be in the entire world on the planet?
This is going to be a horrific guess, far worse than my guess on what percentage it's up for the year. I will say 10 million ounces.
10 million ounces?
Yeah, I have no idea.
10 million ounces. Okay.
We're talking the entire Earth? Like the entire world? I mean, come on.
10 million ounces.
I don't even know how much an ounce is.
We have rich, millionaires in this country, but we also have rich billionaires in this country, right? Let's just start by saying there's over 1 billion ounces of gold. So let's get the higher number, a little bit more than 1 billion. What do you got?
5 billion?
Okay, I love it. You're getting close. You're close within a half. You're close within 500 million. So there is, according to the research that I did, 5,407,112,558 ounces of gold on the planet. So that is an amazing number. That's a number that you really can't wrap your arms around, figuratively or physically, if you will, in terms of gold. But along those lines, that's one reason that gold is thought to be precious, is because it's scarce. Some of the others are that in society, you can use it as a hedge against inflation. So inflationary times, gold is a store of value. It is a form of currency, right? So there are gold coins and there are things you can pass around. So gold is known as a store of value. It's a hedge against inflation. It's also a hedge against global economic chaos, market chaos. Know anything about that this year, Bogey?
A little bit.
A little bit, right?
There's kind of a pandemic going on. Things got a little crazy, yeah.
Yep. And then also, again, it's a hedge against the dollar because, again, it's not correlated, specifically to all these other factors. So that is where gold sometimes shines bright. There are other times that it's kind of, dulled out. But right now, gold is obviously shining bright.
What most contributes to it, going up, being up, say, like you said, 18%, this year, and it being down? Is there one direct thing or correlation there that makes that happen?
Well, it's a combination of things. Sure, if everything else is going well, then gold again isn't as valuable, right? And so whatever you're looking at, if it's going well, if gold is either inversely correlated or as a hedge or a safety against that thing, and that thing's doing well, you don't necessarily need as much gold of any gold. I'm not going to get into it today, but you've heard of the gold standard. That used to be what, the money was backed by gold at Fort Knox and things like that. So again, without getting in the weeds of the past, gold in this environment has several, winds at its back, if you will.
Obviously, you do, a ton of work for your clients, and whether it be stock market, S&P, 500, Nasdaq, all that. When it comes to gold, and this might be a dumb question, but I feel like this is a learning process for me, just like everyone out there listening to the What Do We Do podcast. How do you go about investing in gold? Like, where is it sold, traded? You get my drift?
Totally, right? So you asked before, you said before you didn't know what bullion was, right? So, there's gold bars. Gold comes in different sizes and different, shapes, if you will. So you are probably familiar with gold coins. You probably just the phrase gold coins. You mentioned you see them on TV, right? And again, there are gold coins that are newly minted by countries, and they're used as currency. There are others that are minted, meaning printed or stamped, and they're held, for collectibles. But in addition to that, as I'm sure you've seen somewhere, stacks of gold bars. Maybe you have a bunch in your basement.
Oh, yeah, for sure, yeah. My house is actually made out of those, yeah.
I think the Three Little Pigs and the wolf, right? I mean, did they have a house that was made of gold? That sucker would not have blown huff and you puff and blow my gold bar house down.
Talk about a good real estate, investment, man. A gold house, that'd be amazing, yeah.
But on that note, seriously, there are homes that are, inlaid with gold, right? So it's known as a status symbol, and it's an investment. So you put gold, you put gold in your kitchen for the countertop. Just don't be slicing apples on it. You might cut into it or whatever else. But yeah, so you have gold that is in bars that you can take delivery of. Again, not a subject for today, but you can get gold bars. Certainly, you can get gold coins. You can go to a coin shop. You can order them off of the TV, etc. So gold coins, it's by weight. Which can be an ounce again, or whatever the case is in terms of the weight of the gold. There's also the quality of the gold. There's 18 karat and 24 karat, and so a lot of that has to do with the the purity of the gold, etc. The quality of the gold. You also can get gold in more what's the word I'm looking for here? In less complicated ways. Us as investors, we typically buy our gold through either commodity ETFs, which is known as an exchange-traded fund, similar to buying an ETF on the stock market or anything else that's an investment. You definitely can get a gold ETF. There are also common stocks and mutual funds of gold miners. So if you want to get away from, again, the commodity for a second, you can go and buy stocks, and there's even ETFs for the gold miners. But back to the commodity, you can get into the gold futures. I know that's something that you're curious about, but have no idea how that works.
None.
Good. I don't either. And you don't want to. Right. But on a serious note, you can get gold futures and gold options, and that's certainly not taking delivery of the actual commodity itself. There are things called gold certificates, and then gold jewelry and other types of gold items.
So would you say that gold is, and we've talked about this on a lot, various investments in different categories so far here on the podcast, but would you say that gold is more of a short-term or long-term investment, or as you said, is it more dependent on, it just depends on if things are good or if things aren't so good?
No, that's, again, a great question. And everything that we do here is long-term thought process and long-term expected returns. And if something happens to have short-term success, we will reevaluate and see, again, Another cliche, bird in the hand, two in the bush. And so, I know what, I have a question for you, Bogey. I was reading the other day about some cliches, and, there's one that's, it's like stir the pot, right? Like, what does that mean? I know what the cliche means, but what's the origin of stir the pot? Like, I don't know. I'm going on a little tangent here, but
I don't know what the origin is. I think we need to start, by the way, having a tracker for how many cliches we end up spewing out, throughout the entire podcast. But stirring the pot, it mixes everything up. Okay. You're getting involved in things, with other ingredients and all that, right? That maybe you shouldn't be, or maybe it needs to be.
Because you think it needs to be. That's the thing, right? You think that makes it better. But listen, if you and I stir the pot, then then someone's like,
yeah, because you say it with a negative connotation. Anytime you say, "Don't stir the pot," okay,
right,
and it shouldn't be that way.
No. Right?
It is weird.
Okay, and then one more, and then we'll move back to it. But
what's in the pot too?
I was going to say what the proof is in the pudding. What pudding and what kind of proof, right? So, anyway, sorry for
another
the
cliche.
Tangent. Yeah, let's figure
out. We need a buzzer.
As I said on a prior episode, if anybody out there knows what proof is in the pudding, have them email Kyle Bogey at KyleBogey.com or whatever.
Kyle at Brand25Media.com. How about that?
Please, let's go with the proof is in the pudding.
That'd be great. All right, let's stir the pot here, but in a good way. We don't have to have the negative connotation.
Yeah.
You said, obviously you're looking long term when it comes to gold, and obviously that's something that you're looking for, when you're investing just in general, no matter what it is. But gold, how I guess has it changed over the last even 20 years, and throughout your career? We'll just say that throughout your career, how much has it changed, and has it garnered more interest, more investors potentially over the years?
I'm going to say it certainly has, but I'm going to say just like all investments, it has its ebbs and it flows, depends on what's going on, right? I mean, before my time, again, the gold standard, and there was a shortage of gold, and there's times that they think that the government is going to seize your gold. And so, again, I don't know the entire history of gold, but I do know that it's a hedge. It's always been known as a hedge. Some investments, again, are known as an opportunity. Some might say gold is an opportunity now, and we actually do agree with that because of the backdrop or the need to hedge all these other issues that are out there. So gold can serve the purpose as a ballast, right? And then as an alternative maybe to a bond in a portfolio. Naysayers of gold will tell you that it doesn't produce anything. It doesn't pay a dividend of anything. And a few other reasons why the gold is not an investment you want to put your money in per se. We disagree respectfully that there is a place for gold in a portfolio as a hedge to protect. So when we are working with our conservative to moderate investors, we absolutely have an allocation to gold, and we use it in the commodity or in the bullion, and we do use typically ETFs to get that allocation, but we actually use it as an investment in our more aggressive portfolios using the gold stocks. This is an interesting point that I'll share with you and the listeners, Bogey, is that typically when gold goes up, and we could talk about the price of a gold here in a second, but typically when the price of gold goes up 10%, the price of gold stocks goes up 2 or 3 to 1 or 20 to 30%, right? So when you're trying to take advantage of what you think is an upward move in gold, certainly the commodity itself would be one option. But if you can buy the stocks that mine the gold, if you will, you can typically get 2 to 3 times the return that you would of the price. Do you follow me with a little leverage there, right?
Mm-hmm.
Now, okay, what's the catch, Dewey? Well, the catch is on the way down. So if gold does go down, the gold bullion may not even go down. It might go down again at a unit of 1 to 1, but the gold stocks may then go down 1.5 to 1, maybe 2 to 1. So there is a little bit more risk on the downside, but on the upside or in a traditional, allocation, we a lot of times prefer the gold mining stocks as opposed to bullion.
How do you know the difference between what to, invest in and what not? I mean, I can't imagine. I'm sure you got CNBC on your TV all day, in the office, you're doing everything, these wonderful investments for your clients and all that. But I can't imagine you're, picking up the phone and dialing that 1-800 number because you got to get some gold coins or anything. How do you know what is something, positive, something you should do, and something maybe you should stay away from.
So it depends on what you're trying to
And
accomplish.
that's complicated.
Well,
yeah.
So again, with gold, right? There's a couple different costs. There's the cost to go buy it. Let's just say there's a shop on the corner that you can go buy your gold at, right? And you're going to go buy, an ounce of gold for $1,800, right? So you go in there and you're like, I'd like an ounce of gold, and today's spot price. There's another word, spot price, meaning the price right now, right? $1,800. Boom. I would like to buy an ounce of gold. Great. Well, I'm going to charge you a commission. So it's anywhere from 1% to 5%, for the commission. And then if it's a gold bar, you got to decide, are you going to, gold bar is more than an ounce, but if you're going to get enough gold, where are you going to store it? So you have to pay to have your gold stored, and whether it's in a vault or in the basement, and there's risk of theft, and so it's not, the transferability of it, all those things could kind of make it somewhat complicated. Do you follow me, Bogey?
Sure.
Okay, so if it's a gold coin, you got one in your pocket, that
just carry it with you all the time.
Great grandpa Bogey gave you, that's
he's a big coin collector. How did you know that?
You should have him give you a gold coin every time you see him. You know what I mean? To say, hey, Pops, can I get a coin from you? But so with that, again, there's a cost on top of just the spot price or what you see, and that is something that needs to be, dealt with, if you will. So when you're talking about an investment portfolio and you're talking about $1 million investment portfolio, and let's say you're going to put 10% in gold, right? That's $100,000. So now all of a sudden you're going to have to go get $100,000 of gold and then decide, are you going to get bullion? Are you going to get coins? Are you going to get, ETFs? And are you going to get, I didn't get into this yet, but you can get gold in different currencies, if you will, right? You can get gold that's denominated in other currencies besides U.S. dollars. Here in America, it's known as the American Eagle. You have the South African Cougaran. You've probably heard the word Cougaran before, right? You have the Canadian Maple Leaf. You're familiar? So those are just different terms, and that another topic for another day. But again, that's hedging against the dollar or hedging against different currencies by having the gold in those local terms. I know we're getting complicated fast. So,
I'm just glad you're the one that handles it, so I don't have to think about any of this stuff.
Right. So back to the basics of how we do it. Here, again, if you and I mean this with all sincerity to our listeners, if you are really worried about a doomsday scenario, and there's different scenarios that are doomsday, but in any of your doomsday scenarios, then you actually want to take possession of your gold. You want to have the actual gold, right? And quote unquote put it in your basement and all that fun stuff. But most of us that just want to use it as an investment, and we may hold it forever, but we really don't think we need to take delivery of our gold. We don't need to have it in our basement. We just want to hold it as a hedge, right? Then you might just have it as a certificate. The gold is held somewhere, and you just have a piece of paper that says, hey, this gold is mine. But if things go, to that place we don't want it to go, if it's the end of the world as we know it, that piece of paper, you go get your gold, someone else took it, right? And where's my gold? And so we don't believe that in that scenario, at this juncture, we have to take possession of gold for our clients. So we'll use these things called, commodity ETFs. We'll buy gold via the more transactional methods. And then again, even besides that, we currently for our investors are even using more gold mining stocks and gold mining ETFs, trying to actually get a little bit of leverage during this current environment.
Hi, this is Dewey Steffen, CEO of Great Lakes Wealth. Are you interested in investing but aren't sure where to start? At Great Lakes Wealth, our mission is to provide Wall Street solutions with Main Street values to our clients and the communities we serve. We offer a qualified, experienced, and dedicated team to each and every client. We work with conservative, moderate, and aggressive investors and strive to help them reach their financial goals. So if you have at least $100,000 to invest, please visit our website at www.greatlakeswealth.us or call me, Dewey Steffen, at 248-378-1200 to learn more. Thanks for listening, and I hope you enjoy the rest of the show.
Correct me if I'm wrong. I might be misremembering. I'm almost positive there was an episode of MTV Cribs back in the day, and I think it was President Trump who had a gold-plated apartment in his Trump Tower in New York City. I think I could be wrong about that, but That's got to be one hell of an expensive, investment right there.
So I was actually going to reference that when I was talking about your kitchen and your counter being laden in
So
gold.
you were thinking the same thing I was.
I was, but I didn't want to get anywhere near politics or
No, not at all.
personal. So I just decided to go from, the Trump residence in New York City from that episode. I went to the Bogey Mansion, in Metro Detroit.
I would just be petrified.
Yeah.
If gold is everywhere, like you said, you don't want to scratch it. You don't want to, affect it or anything like that. But unbelievable. I remember that episode like it was yesterday. Hilarious.
Again, it's not as an investment. There's value there for sure, right? But people will gold plate their cars. I mean, again, it's a status symbol as much as anything else. As we kidded earlier about gold chains, there's value in those for sure. They're worth something, right? Those thick chains, 24 karat gold. They're not just costume jewelry. They're an investment, and they're there for status. Different scenario than what we do here at Great Lakes Wealth and Investing, but absolutely in the world of gold. And guess what? If you bought that gold necklace and gold was, $1,000 an ounce, and now it's $1,800 an ounce, it doesn't weigh anymore. It's still the same weight that it was, but it's 80% more valuable. So talking about the appreciation of gold, I think, was something like $700 an ounce back in 2009, if I'm not mistaken. Here we are in 2020, 11 years later, and as I said earlier, it just passed $1,800 an ounce. So you've got more than a double of your money in the last 10 years. It certainly went up to $1,900 an ounce in 2012. Again, devaluations of currencies and inflation fears and hedges against all kinds of issues that were there in the 2009 and beyond. But so 2012, 2011, 12-ish, it went from $1,900 an ounce was the high back down to $1,100 an ounce. So as the stock market was actually taken off in the 20-teens, gold prices were coming down. We said earlier about it being non-correlated sometimes, which non-correlated, again, for our listeners means that it just beats to its own drummer relative to the other thing we're talking about. So if we're talking about stocks, and if stocks go up, gold goes down, that's actually inversely correlated. Bogey, you follow me that?
Yeah,
they're
absolutely.
opposite. Mm-hmm. So sometimes all investments have periods of just, they're actually correlated to one. What does that mean, Bogey?
Correlated
to one. If gold and the stock market are correlated to one, what does that mean to you?
I don't know.
Okay, it means that they go up together and down together. They're correlated, 100% correlated.
They're on the same line.
Yeah,
okay,
right?
I got you.
And that could be arbitrary, or there could be some specific reasons. Now let's go back and see if you're paying attention. If it's inversely correlated, if gold and stock market is inversely correlated, what does that mean?
That would mean if one goes up, the other goes down.
Ding, ding,
and
ding.
vice versa.
Ring the bell. You got that right. Gold star. How about that? We can throw that in there. A little gold star for my man Bogey. So the third one would be non-correlated or uncorrelated. What would that tell you about gold and the stock market if they're uncorrelated and non-correlated?
That it would be hard to know what they're going to do, essentially.
Another gold star, maybe a silver star, just because
they're
it's
impossible to track almost kind of thing.
They just are doing their own thing, and
Okay.
there's no correlation, and there's no rhyme or reason. There's another, I guess, loose cliche up there for the listeners. But right, so right now, gold is going up and appreciating, absolutely. I'm going to reference a report from Bank of America Merrill Lynch that when gold was maybe just a month, 2 months ago, Merrill Lynch came out with a report that said gold was around $1,700 an ounce at the time, and they said in a certain circumstance they can see gold going to over $3,000 an ounce by the next spring or summer, right? So if I told you that, and it's $1,800 an ounce now, and it's going to go to $3,000 an ounce, let's just round at $2,000 to $3,000 or $1,800, to $2,900. Let's just kind of make the numbers run. That's about a 50% increase. Do you follow me?
It's huge, yeah.
Perfect, right?
Absolutely.
And in any of that, did I say anything about the stock market? In any of that,
No.
Did I say anything about the real estate market? No. Did I say anything about bond market? Did I say anything about anything? The tea in China? Did I say anything about anything?
No.
No. So in that regard, in a vacuum, that would just be a good investment on its own if you read the report and you believe what they say and what they say is accurate. Fair enough?
Absolutely.
Okay, so they could be dead wrong, and so the market may go down. If you put all your money in there, which we're not recommending in this podcast that any listeners do at all. But at the same time, if you have a diversified portfolio, some stocks, some bonds, some cash, some gold, some non-correlated, some inversely correlated investments, and we'll talk about, collectibles or alternative investments, like wine and art and whatever else, like, sports memorabilia is coming up. But all that to say that there's, again, a lot of reasons to consider gold right here, right now.
Well, I love that. And by the way, you can hold on to those gold stars and store them for me. Just give me a certificate, okay? And I'll hold on to the certificate. But I'm going to come for you if the world ends, all right? I'm going to need that gold.
Yes.
You had the perfect transition once again, because we do have to get to just briefly. We're both sports guys. We both obviously grew up collecting a bunch of different things. And maybe we can, in a future episode, get into, real estate investing. You mentioned the wine. You mentioned other things, but the sports collectibles and all that, it really does – it catches my eye because you hear stories all the time about, unfortunately somebody passing away or, somebody passing on this box of baseball cards or hockey cards, or whatever. Is there actually value? And I don't want to say big money, but, should you be paying attention, to some of those things if you are, if you did collect them or you knew somebody that did?
As a friend of mine likes to say, of course. Okay, so yes, but again, I'm not an expert on collectibles at all, but I'm going to turn it back to you. If you have, the Mickey Mantle rookie card or the Ty Cobb rookie card in mint condition, I'm going to assume that's worth a little bit of gold. You know what I'm saying? It's a little bit of ka-ching, ka-ching. So that to say that, yes, if you have, my rookie card, I guess it might be worth less, right? But so yes, absolutely. But it depends on the circumstance, and again, way beyond anything I'm familiar with. But maybe you are in terms of not only players' cards, but we certainly know that these professional athletes autograph their jerseys, they autograph shoes. I have a few, pieces of memorabilia in my my man cave.
Yeah, I was gonna say I've been to Casa de Dewey, and there's a few nice pieces in there.
We go by last name, so it is known affectionately as Casa del Stefan. But thank you. Yes,
I didn't see any gold bars though. You must keep those hidden somewhere.
I don't have it. You will never see those. Okay, Bogey. Maybe one time I'll get you a tour of that part of the house. But right, so they're fun to have. The collectibles that I have, I don't even know if they are collectibles. Frankly, they're just memorabilia. I guess that's the way to talk about it. So the value, I guess I would, if you have any color in terms of what things are worth, what they aren't worth, this and that. And on the same, question, taking it further, I'm curious about, collegiate athletes and their autographs and the whole big, maybe let's go subject by subject of current memorabilia, but then the future ideas of, athletes, amateur athletes, collegiate athletes signing their names and if they should be paid. What do you think about that?
Well, why shouldn't they be? To me, they're in the free market, Why can other college students go out and potentially sign something and be paid to do it? But these football players, basketball players, whatever it may be, no, they're not allowed to make a buck or make a couple of $100, or something like that. They should absolutely, be allowed to do so, and they're going to be now, moving forward. So I think it's a good move for college football, despite guys like Dabo Sweeney who say, "Oh no, these players could never be paid. The integrity of the game." Please, it'd be fine. It's not a big deal at all.
Okay. Well, that what does that do? That says that, right? Or that what does that do?
I think so. The only thing that you worry about is you get all these, older guys that want to get the autographs and then they want to go on the market or put it out on Facebook Marketplace or wherever and sell it. Hey, autographed, Trevor Lawrence jersey for, $1,000, and they're making the money, not necessarily the student athlete. But I've always been fascinated. I have some, pieces of memorabilia and whatnot, nothing overly valuable. I just wonder how you go about authenticating it and keeping it, in tip-top shape. And, do you get a certificate, that says, hey, this was authenticated by so-and-so? That I guess I don't understand. To me, you keep that stuff for sentimental value. If you stumble into, like you talked about, a big rookie card that is worth $15,000, hey, you know what? Good for you. That's great.
Yeah, my background with it is just going to, whether it's charity golf outings or just to events where they have these auctions, the silent auction where you just go and write your number down and try to bid on something. And so there were, different autographed balls or autographed, pictures. And so I'd put my name down just to help the organization. And it'd be kind of cool just because it might have been a hero of mine or this and that. And so same thing, I think when I first started doing it, there were no certificates and there were no authentications. And I don't think people had even understood that was something to make sure that it wasn't, a fraud or a phony, right? But the last few that I bid on and, signed to auction for, they had the certificates. They had a hologram maybe even with it. And then I'm like, oh, wait a second. Well, what about all these other old ones? And again, I don't think I'll ever turn around and sell them. That's kind of cool, again, when you come to Casa del Stefan to, walk the wall and see what's there. And I will tell anybody who's listening, I'm missing a Bo Schembechler. I've got some other of my Michigan great coaches, but I am missing a Bo Schembechler. So I'm going to try to find myself an autographed Bo Schembechler picture or item of memorabilia, and hopefully it doesn't cost me $15,000.
So if you have one of those signed, Bo Schembechler memorabilia, please email Dewey, and he'll get in touch with you about getting on top of that. All right. Well, episode 8 of the What Do We Do podcast. I think we covered a gamut of things. Honestly, I thought you could have talked about gold for about an hour. Incredibly informative. I learned a ton of things. And by the way, I'm still expecting that certificate. So please, before we leave, make sure you get that to me. I want those gold bars, or at least to collect them if I ever have to. But that'll do it. Please subscribe, download, share, follow all of the social channels, the What Do We Do podcast, Facebook, Instagram, Twitter, Great Lakes Wealth Management. Dewey, always a fun, informative time. Feel like I'm learning a great deal.
As always, we're here with Wall Street Solutions, Main Street Values. We want you to do your work, be thoughtful, and enjoy the rest of your day.
Bingo.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.